What are some of the main things you would recommend to somebody who, let's say they've got right now a 560 credit score, maybe they've got some charge-offs, maybe they financed a few cars, but they want to buy a house. They're tired of renting and the rent's going up on them every year. What would your advice be to that person who's looking to make a move towards buying?
Well, if you're looking at credit card debt, if you keep your balance below about 30% of the limit, then that helps your score.
Yeah.
They're looking for on-time payments over time.
Yeah.
So obviously, I shouldn't say obviously, because I have a lot of people who do apply and they're past due currently on 6 different accounts.
Yeah.
But in general, credit cards, we look at that. If you've got 5 maxed out credit cards, your score will be lower.
Yeah.
And here's another thing people don't know is over a 24-month period, you are rated for how you handled that credit card. So if you've had that credit card for a few years and it was maxed out until 2 months ago and all of a sudden you paid the balance down to 30%, it's going to help you, but not as much as if you kept it at 30%.
Yeah.
And it also doesn't mean charge it, don't max it out and then pay it down, because sometimes that credit card will report to the credit bureau before you make your payment. So they report it's maxed out. The next day you owe $300 on a $1,000 credit card.
Yeah.
But you missed it because that's not when it reported to the bureau.
Well, I get that question all the time. Well, not question, but I get that comment from buyers all the time. They say, oh, well, I use my credit card, but I pay it off every month. So meaning they put everything on the credit card, and then at the end of the month, they pay it off when they get the bill. They pay it in full, and technically they never pay any interest because they always pay the bill without paying interest, which in theory is great. And some people do actually do that. But is what you're saying, is that not a good practice if you're trying to buy a house?
It can be just as bad. When somebody comes to me and they've really messed up their credit years ago and they're just trying to reestablish.
Yeah.
Credit's always a balance of good and bad. So if you had some issues 5 years ago and you haven't done anything good since, your credit still looks bad.
Yeah.
And in fact, you might not even register a credit score. Now if somebody's trying to reestablish, I've told people, hey, go get a secured credit card where you send them $300 and then that's your balance, your credit limit, $300. Go charge $100 on it and pay the minimum monthly payment every month.
Okay.
And of course, the objection is, well, I'm going to pay some interest. Well, yeah,
what, like $7?
You're going to pay some interest, and that's just going to be the way it is. I mean, it's how the credit industry works. But you'll be able to buy a house down the road. So I've had a guy raise his credit score 40 points in 90 days doing that.
No kidding. So the strategy then is to get a credit card. Mm-hmm. If your credit is not good enough to get credit issued to you, get a secured credit card that will, you pay the money up front, go charge up 30% of that balance, and then pay the minimum payments on time every month. That's essentially what's going to raise that score?
In that, they want on-time payments over time, and they want you to carry a balance.
Is that right?
Because then you're paying interest.
Yeah.
Right?
Makes sense.
And that helps the credit industry keep going around, right?
Yeah.
So, why would they not make that benefit you more, right? It just makes sense.
So you they want you to have a balance, just not too big a one.
Exactly. They want you to manage it well.
Okay.
So next thing is collections.
Yeah.
Man, we get questions about that all the time. And people, I really wish that people would call me before you pay off a collection or before you do anything with a collection.
Yeah.
Because I've had so many people tell me, okay, I'm paying off all my collections. Whoa, hold on. If you've got kids. Well, you've got a kid.
Yeah.
I have 4. So I have seen this in action many times, where, your kid, if he got in trouble a year ago, right? And I mean, you got 2 brothers.
Yeah.
Right. I'm sure you all got along 100% of the time.
Always. Yeah.
Right. And so, let's say you got in trouble a year ago and you come up to your mom and you're like, hey, remember a year ago when I beat the crap out of my brother?
You just stirred up an old emotion. Yeah.
She's going to be all mad at you again. And the same thing can happen with collection accounts.
Yeah.
So I'm going to say something not a lot of people are going to like. I mean, it goes against my own values. Like, I always feel like if you incurred the debt, you need to pay it back, right?
Right.
Although there's an argument to be made that a lot of those collection accounts are fees and interest that are, just
exorbitant.
Crap.
Yeah.
Yes. So, but if it's less than about $1,000 and it's more than 2 years old, leave it alone.
Yeah.
Because what happens is, let's say you start a $10 a month payment plan, your credit score will drop because it's a recent activity on a collection account, on a delinquent account from the past.
Yeah.
And so you're almost better to leave that alone, unless you have more than $2,000 in total collection accounts.
And why is 2,000 the magic number there?
Because on the FHA loans, and the reality is conventional has a different set of rules, but you got enough collection accounts, you aren't getting approved anyway.
Yeah.
But on FHA, which typically they'll have a lower score anyway. If you've got more than $2,000 in total collections, I have to count 5% of that as a monthly payment.
Okay, so that cuts into the debt to income ratio.
Right. Now it's causing a debt to income problem. So again, back to sometimes it's the score, sometimes it's debt to income ratio, and sometimes it's the debt to income ratio you didn't even know you had.
Yeah.
Right? Or you actually don't have.
Yeah.
So some people have had a lot of success though with settling those collection accounts for less than the full balance.
Yeah.
You think about how collection people work. They get paid generally, I don't know, half of the balance that they collect, and the rest goes to the original creditor. So if they collect $1,000, they're getting $500, right?
Yeah.
Or if maybe, the balance on the credit card was, I just had someone tell me the other day that they settled a credit card for like $700 and it was like a $12,000 debt.
Yeah.
Well, that happens all the time because they're getting nothing right now.
Yeah. Yeah.
But a word to the wise, get it in writing. And if you can somehow, when you settle that credit card account, if you could or that collection account, if you could somehow get them to agree to remove it from all 3 credit reports,
Yeah.
then as if it never happened, that is the best possible scenario.
Yeah.
And some people have had some luck with that, and it's helped their score. I'm not saying collection accounts don't, getting rid of collection accounts doesn't help your score. It can, and it definitely can over time. But if you're looking for the quickest bang for the buck, negotiate some sort of settlement, get them to remove it from your bureau as if it never happened.
Gotcha. And charge-offs, is that kind of the same thing as a collection account, or?
Best way to explain the charge-off is a collection account that they've basically given up.
Yeah.
They've charged it off to loss. They've written it off on their books.
You're a lost cause.
You're a lost cause. They're never seeing a dime from you, right? And so it doesn't count. I don't have to apply a payment to it. If it's that old, I hate to say leave it alone. Now, sometimes if it's a large charge-off, then it's probably going to help you to pay it off.
Yeah.
You should handle that because
And you can probably settle it for less than the full balance if it's that long ago.
Yeah. Now you're not only dealing with the collection agency, you're dealing with the collection agency that's given up.
Yeah, exactly. Yeah.
Like they're not expecting to get anything, and they got $500 out of you. That's good.
Yeah.
So that's absolutely it. But it's a complex world, the credit.
Yeah.
So you have to be careful. And you have to. It's best to talk to somebody who actually knows something about credit, and who can actually help you.
Yeah. And I get a lot of questions because I always introduce you to my buyers that are looking to get financing. Mm-hmm. And a lot of them who don't have the best credit all have the same first question. Does your lender do credit repair? I've heard of these credit repair guys that can get you, or they can get me, my credit score up by 50 points in a week. And I hear that very, very often in the real estate world. Mm-hmm. What are your thoughts on credit repair companies? And if you're not a fan, what services do you recommend if I'm looking to really get a good understanding on my credit and how I can improve the score without using a credit repair company? Which direction would you steer me in?
I've done this long enough that I know that if there's not some participation by the buyer, then it's not successful.
Right.
I might hurt someone's feelings by saying that, but it's just the reality. You got in the situation by not doing the things necessarily you were supposed to do. In general, there's exceptions, of course. But in general, like if you weren't clicking the button to make the payment, chances are you're not going to write a letter to somebody saying that account's not yours or dispute it.
Yeah.
And that's often how credit repair works, is that, they will take everything bad on your credit report and they will send letters to the creditors and say, this information is inaccurate. It's not my account. And so the rule is if that creditor does not respond within 30 days, they have to take it off your credit.
Okay.
In the meantime, it has to be removed from your credit score calculation altogether. So all these hero stories that you hear, I had a 502 credit score and all of a sudden I had a 750
Yeah.
when I went to credit repair. Sure you did, for 30 days.
Yeah.
I don't do credit repair, but when somebody applies with me, I have 3 answers. Yes, or yes, but if you did this and this and this, you'd have a better interest rate. And hey, not right now, but if you do these things, you can get there in roughly this period of time.
Right.
And then it's kind of on them to do it.
Yeah.
Because honestly, even if they go to credit repair or they don't go to credit repair, we call these folks back 6 months, 12 months later, and the majority of them, unfortunately, haven't done anything.
And that's the sad truth about it. Some habits, especially bad ones, are very tough to break. Now, with the credit repair, let's say somebody does go dispute all that for 30 days. Is that a lot of buyers also think it's a hack that they can, I can just, hack my way into a better credit score just to get a mortgage loan approved, and then it's going to go right back down. As a lender, do you have to factor, how do you factor that in?
Well, so the underwriters aren't dumb.
Right.
Like they know that this goes on. So one of the very first things they're going to make you do is remove the dispute language from the bureau. In other words, if you've got send a letter saying, hey, this information's not accurate, remove it from my bureau, and it now gets removed out of your calculation until 30 days pass, they're going to make you write a new letter that says, I no longer wish to dispute this. So it gets added right back in. Because, to get an accurate credit score calculation.
Right.
And so, credit repair, yeah, you can kind of do it yourself. I hate to say it, but, God love you if you're a good credit repair person. Sorry. But they can get a copy of their credit report themselves. They can get a general copy of their credit report from annualcreditreport.com.
Yeah.
Now, that suggests every year. It used to be every year you could get one copy of each bureau, each of the 3 major credit bureaus. During COVID, it became once every week.
No kidding.
So you can actually go on that website. It's annual credit. Doesn't cost a thing. It's run by the 3 major credit bureaus in response to federal law. You have to have easy access to monitor your credit at no cost. And so now, believe me, they will try to sell you anything and everything on the way. But you can get free copies so you know generally what's on there. There's no scores.
Yeah.
And the reason why is because that system is not supplying scores. That's not what they're in the business of doing. They're just making sure that your consumer information on those bureaus is correct.
Right.
And so now you can dispute electronically. You can click on these, say this isn't right, and it'll send the dispute information. You don't even have to write the letter anymore.
Yeah. Okay.
So that's one option. Now, people always say, well, gosh, but I want my scores. What are my credit scores? And as discussed before, there's 18 different scores, I believe it is now, for Experian. And Equifax has 18. TransUnion has another 12.
Yeah.
Dozens of scores for all kinds of different industries. So which one are we looking for?
Right.
If you're getting a mortgage, the mortgage score is all that matters.
Yeah.
And so there is a service called myfico.com. And I promise you, hand to God, I have nothing to do with them. I don't make any money off telling you to go to myfico.com. It's a service, it's a paid service, and it'll provide you all of your credit scores for all of the different industries.
Yeah.
But that system will allow you to see all the scores, and then there's a simulator like, hey, if I pay $500 on this whatever, what'll my score be?
Yeah.
Or you can run it in reverse and say, hey, I want this score. What do I got to do?
Yeah, it's very helpful.
And one thing I just remember too, because this is a trick a lot of people have used, and it pertains to credit cards. So, if say you've got a credit card and your wife's credit is damaged, not great shape, or she just doesn't have credit, you can add her as an authorized user.
Yeah.
And a lot of times that's a solution, especially if, a lot of people, they get a 500 credit score and they're just fed up with the whole credit thing. And so they just stop using credit for like 5 years.
Yeah.
Well, a lot of times, if you get added to your spouses or friends or whatever. I mean, there are businesses that will, for a certain amount of money, they will find you somebody with an 800 credit score and add you as an authorized user to that guy's account.
No kidding.
Yeah, not the way I would recommend. But, point is that, yeah, you can add yourself to an authorized user. It also works the other way, though, because if the person you're adding yourself to their account doesn't handle their account well, one of our children had that problem, got on the other parent's credit card, and she doesn't handle it well. So sure enough, credit score dropped.
Mm-hmm, sure.
My suggestion at this point in the market, as we're starting to see, we're in a wait and see period on these tariffs. We're in the wait and see on other economic indicators, and we had something come out about the UK and what they're going to do, and those tariffs, and that was great, and it did different things to the market. Eventually, we're going to get past all this, and rates really are going to come down.
Yeah.
And when that time comes, or when you find the perfect house, wouldn't you rather be ready to jump on it?
Yes, absolutely. Yeah.
And that's sort of what we're kind of moving to is okay, we've given you an overview of how all this works, but now let's apply it.
Right.
Let's apply it, and you know what? Maybe we get you pre-qualified, and then tomorrow you just drive by your dream house.
Yeah.
Could happen.
Yeah.
Or maybe we get you pre-qualified, and then you find a house 3 months later, but you follow some advice we've given you, and your credit score's higher.
Yeah.
So you get a better interest rate.
Or maybe even you do speak with the lender, you do see that you have good credit, you have reliable job history and all that, but you've got a car that's way out of line with your DTI, and you start to make an extra payment every month to try to get that knocked out soon, so you can wipe that off of your balance sheet as far as your debts are concerned. So there's a lot of things that you can start doing, and I think that's kind of the overarching message that I've had with my clients. Right now might not be the right time to buy. I have a lot of clients for whom it is. I've got cash buyers, I've got sellers that need to move out of state for whatever reason. I've got people that are very comfortable with the rates and they feel like they're getting a good deal on a home because there's not as much action in the market as there have been when rates were really low. And then I've got people that say, you know what, I'm just not ready yet. I need to do some things. Well, that doesn't mean that I just wipe you off my list of people, for the next 6 months and don't touch base with you. I'm going to follow up with you and see, how can I help you? How can I put you, I like to call it a power position. How can I put you in a power position to be ready to buy when the time does become right for you? And all the things we discussed today, the way you broke it down, I think is really helpful for people that are out there that are looking to buy but not immediately and may need to correct some things in order to do so.
You know what the worst feeling is as a lender, and probably as a real estate agent too, is you go out, I'm sure you get everybody pre-qualified before they even get in the car, right?
Oh yeah.
Yeah, that's crap. We know nobody does that. So you've showed them 5, 2, 3, 15 houses, whatever.
Yeah, 50.
Yeah, 50, and then tell them about getting pre-approved as a lender, because you just have all this time and free gas and all that. So you decide, hey, it's time to go talk to a lender since you found your dream home.
Yeah.
And then you get them hooked up with me or whoever, hopefully me.
Yeah.
And I got to tell you, they're not approved. They're not approved because of this, and this. And it's all stuff that we could have fixed 3 months ago.
Yeah.
Or 6 months ago. That absolutely sucks.
It does, yeah.
But what's great is what's awesome. The corollary to that is what's a great feeling is if you've worked with somebody for 6 months or 3 months or a year, or I have some that it's been a couple of years.
Yeah.
And they've followed, and we talk every so often. I did this and I did that, and okay, let's look at the credit, see what it is, and where's your month, and maybe it just wasn't the right stage of life. But the greatest thing is to see them at the closing table.
Yeah.
And they're getting to go to the next chapter of their life,
Yep.
whether that's a bigger house for their family, or they're moving. Maybe they're downsizing.
Yeah.
Or maybe their kids are just a real pain in the butt. They're only going to get a 2-bedroom house, so they can't come back. That's a happy day for them.
Yeah.
Right. And so that's the most amazing thing, and that makes it all worth it.
Yeah, I think that's well put.